Hello, this is Dave, and welcome to Equities Story. I'm with the most incredible Mr. Wolf, and this is obviously just a general share advice and not personal advice. Good morning, Wolfie. Did you have a good weekend?
Well, a little bit better this morning when I've got some stocks are going okay. So maybe we'll have a good day today.
Did you manage to scrape enough money together to buy some food with the inflation?
Well,
did you manage to? What a banana! Yeah, what are bananas now? Like $20 a banana?
Well, lucky I've got my own banana trees, right? So I don't have to worry about that. But everything else is going through the roof.
Very clever, very smart.
I got my own little veggie garden. You know, I'm prepared for the doomsday scenario.
Right, you're one of those people. I bet you've got the whole thing. Yeah, what are they called?
Preppers.
Preppers. Yeah, I reckon you've got guns in the basement. You're ready to defend your bananas.
Yes, absolutely. I've got gas masks. I've got a bunker to hide in. I'm done. I'm ready.
And ready to sell Natalie, of course. Any sign of disaster.
Tell you what, my finger's itching to push the sell button.
All right, listen out, Wolfie. Let's just have a look today, because Einstein's really nothing, right? The only stock that looked exciting, hasn't gone on with it yet, is RIC. I mean, it's been a standout story really all this year. I mean, but had a buy signal, good company, good growth in the right sector. That's the only story out of 2,400 I could sort of get excited about. Now,
I think after last week, Dave, that was an incredible chart. So you only had one choice.
Oh, definitely. And so it'd be interesting if there is more. They're going to have an announcement soon, or there'll be something coming out of that company, because it is absolutely excellent. Wolf, I just wanted to talk about the Dow very, very quickly. So it's quite interesting. If you look at the Dow, there is natural support here on this trend line. You look at the S&P, again, we've got some natural support. And you can see with the tech stocks, they've actually broken through natural support, which they actually did hold up for about 3 or 4 weeks. Yeah. And they did have a bounce off natural support. I would think, Wolf, and this is again very hard to obviously know the future, but even if it's a rough night this week, I think there's a good chance if we're going to have a bounce, it's going to be this week and maybe next week. So what I would say to everyone, if you didn't sell out, you didn't get out at the right time, possibly, Wolf, can I say possibly, we could have a bounce this week and next week, right? Which, if you're in some positions you're not too happy with, maybe could give you an opportunity to get out of them a little bit of a better price. So, poor price action last week. There is a little bit of support. There is a possibility we could get a bounce, Wolf. I don't believe, correct me if I'm wrong, we've got too much inflation data coming out this week or next week.
Fairly quiet, I think, this week.
Yeah, so possibly. So even if it's a little bit hairy tonight, I wouldn't worry. Let's see where this is. Maybe midweek, we could have a little bit of a bounce. Now, what sort of worries me a little bit, Mr. Wolf, and we've been talking about this earlier. So if we bounce if we do have a bounce on the Dow, I'm a little bit concerned. Will that still bounce? Will our market still have a bounce? Are we seeing this commodity sell-off at the moment? And are we still going to keep on going south? And I suppose this is a question I'm going to put to you, because no one in the world actually knows the answer.
Except me.
Except you.
Okay, look, it's a very easy question. Sorry, easy answer for the question. Well, no, it isn't. But let me give you two sides of it, and I think this is what the problem is. There's two opposing forces here. So you've got the war with Ukraine, Russia-Ukraine, that's been propping up these commodity prices. On the flip side, you've got interest rates rising. You've got inflation going through the roof, and possible, as a result, right, with the high interest rate rises, possibly cooling off global economies and maybe a recession. So recession means less demand for the products or for the commodities potentially. So you've got, on the one hand, the war that's driving the prices up. on the other hand, you possibly got pressure, downward pressure on weakening economies. So where does this leave commodity prices, Dave? I think in a flux at the moment. I think this doesn't know where to go. However, I've seen them coming down. So I think maybe the stronger force is the scariness of a recession, I think. Because when you have a look at it, you've got lead down, tin down, zinc down. What else have we got? Cobalt down slightly. The only thing that's up at the moment is nickel that I can see this morning. So I think the overall general overruling theme for me is the recession right now. So if I was in any of these BHPs, S32s, if you see a bounce, even though I know this is a war stocks, this is the thing, this is what I'm talking about. If you're going to see, and you're trading these things and you still haven't got out from last week, take the opportunity to get out.
Definitely. I mean, the only, especially obviously with iron ore as well, Wolf, and
That's
we
right.
talked about this, obviously steel prices going down. Iron ore, you said to me earlier, it does tend to follow.
Yeah, there is a correlation between the two.
So, yeah, I think you'd be getting out a lot of those stories, wouldn't you?
Yeah.
One, I would argue, crude. So as this war develops, is embargo against Russia and the fact that Russia is going to struggle. I mean, surely it has to be, because even if we go in recession, the world's not going to stop driving, the world's not going to stop moving. Crude still is any dip in crude just going to be an opportunity, Wolf?
I think that's the you can make only case for one commodity would be oil and gas, because it's not just driving, it's also energy, Dave. So I think for me, we still need, especially Europe right now, when there's Russia's cutting off all avenues to its gas. So you still need that energy mix to come through. So I think that's probably the only thing I'm thinking, that if you're going to be still holding anything, probably oil and gas stocks. Other than that, I'll probably be looking at exits from the other stuff.
So sort of any sort of weakness on stocks like WDS, if they come down to trend like they are now, and they start turning up,
we've got to remember also that we're in the middle of the year, and from here on, I suppose, well, maybe from 2 months on, we're going to start cooling weather. Cooling weather means heating. Heating means you're going to be using a lot of energy, gas especially, right? So yeah, it's coming. It's we're getting closer and closer to the winter time again in the northern hemisphere. So I'm talking about that already when we're in the middle of summer, but that's the thing. You got to look at a longer picture here, and it could be possibly that's the only commodity that I'm looking for as a opportunity if there's a bit of a sell-off.
Brilliant, thanks for that, Wolf. So just to recap, and maybe the markets could have a little bit of a bounce. Unfortunately, we're a little bit concerned that we might not follow that bounce on the Dow. Well, maybe stocks like XRO, some of the tech stocks could bounce. Maybe some of the CDAs of the world, but certainly the commodity stories could still pull our market lower over the next 2 or 3 weeks. So it'll be interesting to see how that plays out. And like Wolf says, possibly oil and gas, some of those stocks, if they come down to trend. I was just having a look at one, which is Santos, just looking there. It'd be interesting if we can hold that level by this week, start turning up. So there's maybe a possible opportunity, Wolf. So just see where it settles and see how it does a little bit later on in the weekend. Maybe we've got a trade on Santos coming up. Now, the other thing I wanted to talk about, Wolf, was the effect on crypto. So 300 million people around the world own cryptocurrencies. I think it's 8% of the American population. So a lot of younger people, Wolfie, 20 millennials, 20s, 30s. But some have got some decent money in this. And we've seen this absolutely horrendous collapse of cryptocurrencies around the world, and billions and billions of dollars have been wiped out of people's accounts. Now, unfortunately, a lot of these companies that do cryptos can also highly gear their investors. Some are geared up to 25 times or 10 times or 5 times. So again, with these big losses of crypto, you know, a lot of people are going to be selling positions or selling out, and maybe having to sell some shares to pay for some of the losses. So all this just doesn't help, does it? It's all.
No, it doesn't. You know, it's been a great ride for them during the zero interest rates time, right? So it's been a FOMO type play. I still think there's a place for cryptos, but you know, it was just ridiculous, way overinflated. Look at the ride from 2020, right? From there, so 11,340 went up to almost 2,500, I think.
Just on that buy signal, back.
Yeah, look at that, ridiculous, right? So it's got to come back to probably those 2020 levels, Dave. So we're getting there. There's another probably half from here. Yep, half from there. We'll probably get there.
And Wolf, there's a good chance, possibly, obviously, we're going to be, we'll look to trade some of these cryptos in the future.
Yeah, but it's just a, you know, it's like anything on the markets, you know, the stock market. It's just a very, very high risk, good story.
Yeah.
In trading. So now, you know, the rug's been pulled. If you got caught in it, you're probably sitting going, oh my God, what do I do now? You know, if you can stomach it, you have to fight through it now. But if you lost it, you pretty much have to write it off.
Yeah, look at this Dash coin. Yeah, sort of, this came on at 150. It went as high as 450, and now at 43. This is an absolute complete collapse, isn't it?
Yep.
Next thing, Wolf, a few companies put out announcements today. So
yeah, let's go through them.
Now, CCR, which is a story you've liked, you've hummed and hard on it a lot. But come on, good news. They're turning profitable.
Yeah, absolutely good news. So it's been a story that it's probably one of those I thought it's going to have a great future. Then I thought, nah, they're changing tack slightly with the fundamentals on it. So I'm going to get out and sit on the sidelines for a while, see what happens there. You know, obviously the sell-off in the tech space didn't help, so it's come back. It's been doing all right recently with nice announcements, definite strong growth in a space, and they are in the debt recovery space, right? So you could say in a low interest rate environment should do quite well. In a high interest rate environment, you know, I'm not so sure. So we'll see how they go. For the moment, they've been doing quite well. Good on them, but you just can't touch these things.
Yeah, definitely, and you wouldn't touch that price action again. Very, very weak. Wolf, VCX, and we've put this on as or mentioned it as a potential dividend play. Not a bad announcement. I mean, the valuation's obviously coming up and starting to get back into their groove a little bit.
Yeah, look, it's funny because I saw that headline, right, saying guidance update. I'm thinking, oh my God, because I mean, I'm nervous on these real estate type plays. So I'm really thinking, oh, this is nice little upgrade, something. This is pretty good. But is it just, you know, last throws of the dice in this space for some of these real estate things? So,
well, again, that's the argument, isn't it?
Yeah.
Is it, you know, they just had their sort of property valuation increase, right? Maybe
from the last 6 months, right? When things are going well.
You know, that could be very different in 6 months from now. But you did say, Wolf, a lot of your analysis that you've done in recession, shopping centers don't do that badly. Is that still...
It's true, but you know, at the end of the day, there is a big unknown. I mean, how far are we going to come back? And I've been reading a very interesting article over the weekend. The industry says, the industry itself says, the RBA, what they've done, what they're doing, they've done some modeling, and they're saying that with the RBA's, you know, rising interest rates and everyone obviously following, the modeling says the property prices will come off 30%.
Yeah, but I think that's very, yeah, listen, I think that's very, I think 30% would be absolutely nothing, to be honest with you, because they've jumped 30% in the last 2 years. So
yeah, but you know, it might be nothing, but it is a lot for those that bought it like a week ago.
Yeah, no, definitely. But I think I don't believe the 30%, Wolf, because at the end of the day, if they go back to the sort of pre-pandemic levels, yeah, surely that's the real price of property.
Yeah,
and surely, you know, if it's going to go lower, it goes lower after that date.
I am of the fact that I'm happy for the price, because we've obviously had a very strong run, right? So we need one anyway. But I think the shock for people that are mortgaged, who are looking to buy, and you see 30% downside risk, right? Just on the back of this study by the modeling that's been done, I think they'll be probably holding off buying anything. So you could see pressure, price pressure. So I just think that the psychology of things, Dave, is probably one that's worrisome more than anything else. Whether it happens is another story.
And what's the chances of 50%?
Look, like I said, anything can happen. It just depends how badly we're going to be hit, for example, recession-wise, if there's going to be a recession, and globally as well. This is a lot of factors in there. I think 50% is highly unlikely, but you just never know. I think 30% even is highly unlikely, but you just never know. It's always, Australians are always in love with property. So I think any pullbacks would probably be opportunity to buy it. Unless we've got really strong interest rate moves. So instead of 3%, 4%, maybe we're going to have 5 or 6%. Then maybe there'll people be going, "Ooh, maybe we're going to hold back up a little bit."
Yeah, but Wolf, my point is a little bit like the charts. I don't think you can count the last 2 years of the rise in property. I think that was just a pandemic bump up. I think you have to sort of go back to 2 years ago and say, right,
that's the starting point.
Yeah, that's the starting point. That's my issue. So, I don't know. I hope property doesn't go down that much, but I think these are definitely difficult times for a lot of people.
There's a definite chance there. And like I said, I could see it. I could see it quite easily happening. But it's a fine line, and it's going to be a balancing act for RBA, the government, to make sure there is no property crash in Australia, because there's going to be a big fallout if there is.
So, but saying that, how do they balance that? Because you've got inflation. Inflation is the number one thing to fight, right? So past governments have never looked at that. They've always just said, right, we've got inflation. They've raised interest rates too.
Yeah, I think at the moment the RBA is okay. They can just raise the rates probably to 2%. It's not going to be hitting too much. I think once it gets to 3, 4, 5%, then potentially they're going to have to think about both ways to see how they've affected the actual inflation and see how they've affected the actual house prices, and then they maybe just need to ease off a bit. But it'll be interesting. We'll see how it goes. I mean, it's always the unknown that is the troublesome thing, because if people are not sure what's going to happen next, they usually tend to sit on the sidelines or get out of things.
Wolf, NWE. This is another interesting story, because if you read the headlines look obviously very interesting, but your advice to people is really to stay well away from this. Can you?
Like with anything in life, Dave, if you don't understand something, probably don't invest into it. It's even more pronounced and amplified when looking at the oil and gas sector, because it is so technical. There is so many little things that you're probably not aware of that could make or break a discovery, for example. So for me, if you don't understand the space, don't trade it. You're probably going to get you're going to get egg on your face, or you'll get your pants pulled down. That's always been my case. I know you can trade these sometimes, and look, if I'm going to be trading the oil and gas space, trade the ones that we know about, the Santoses of the world, the Woodsides of the world, because this is just almost Russian roulette.
Yeah, so be a bit careful. Now, TLG, which is a better story, Wolfie, they're getting closer to...
Yeah, look, I always had a soft spot for TLG. I remember meeting the guys, the actual management way back when I was still big in Perth. Always had a really, a fantastic deposit in Sweden with incredibly high grades. So, at least they've got the basis covered, right? When you've got a great resource with an incredible high grade graphite, then you can just build on it. How successful they are building upon that is going to determine the outcome of where this is going to end up. So I like to have the fundamentals there. The question is, can they commercialize whatever they were going to do with the technology? So I'm still a believer in the story, except the market at the moment, it's not easy.
No, I think you just got to wait with these sort of stories till they're back over trend, Wolf. Obviously.
Yeah, and the funny thing is, you just say that this is what's happening, right? A lot of the stories are losing faith with investors. So we talked about the war stories, we talked about the dividend stocks. We talked about the values, even all those themes are getting hammered, right? So you know that the capitulation that we see last week, when nothing's trending, right, except one or two stories in the market, it is difficult right now. It is just extremely difficult.
Well, for LUCA in the news now, it's below trend. So for me, technically, commodity story, I'm out. You're sort of, you've argued the case, and you argued it. You know, BHP, you could look at a monthly. You've argued in the case that maybe a LUCA S32, you could look at monthlies. They're the better commodity plays. What's your argument for LUCA to give it that extra tick of approval that maybe you could look at this on a longer term chart, Wolf?
Yeah, look, I think if you look at the commodities that they're in, so mineral sands and now getting to the rare earths, right? I am definitely much more excited about the rare earth side. And that's the reason I probably put it on monthly, because if I'm thinking that rare earths is going to be the next green commodity, well, at least a commodity is made up to make it green, then I'm looking at the long term, because we've got this electrification that's going on. We've got move towards definitely looking at climate change. So all these commodities within the rare earth space is a long-term prospect for me. So when I look at the long-term prospects, while I'm happy to look at on a weekly basis, when the markets shit itself like it's been happening at the moment, then maybe I'll throw it onto the monthly and seeing, okay, is the support still there on the monthly type business? If I'm happy to hold through a bit of a rough patch, right, with a view on a long-term basis. When I say long-term basis, in this case, it's got to be at least 3 to 5 years. So possibly, like a five type thing. So for the moment, I'm still okay with this, right? But definitely, if you're just a trader, you'll be out. You can only make a case on a long-term basis if you're a believer in the rare earth space, which I am. And
when they talk about this demerger, is that something that could give value, or?
Possibly, the demergers over the last few years, it doesn't matter which space you're in, usually end up well for the investors out there. This is just that it's demerging its African business. So potentially there could be some value unlocked, right? You're going to have managements that are being stretched all over the place from looking from Australia to Africa. You've got maybe a full management focusing just on Africa, which potentially could release some value in this and growth. So yeah, look, it tends to be positive for the investors out there if they hold things like the stories that are demerging.
Wolf, and we're going to do lastly but not least IFM, so Infomedia.
Yes.
What's going on here, Mr. Wolf?
Look, I'm actually I'm normally not a big fan of buying and punting on mergers or acquisitions and so on, but this one's quite interesting. It's a little bit different because you've got now 3 parties who are looking through the books, right? So there's definitely a lot of interest in AFM. It's a business that potentially should be doing much better than it is, right? Pandemic has affected it. They talked about it. So it was trading at almost 250 back in the day. 2 already indicative prices as 170, 175. So at 160, you've already got like 10% in it, right? If they come through, I know it's speculative and I know it's still early days, but if the people that are looking through the books are happy, they'll probably come up with that 170, 175 pricing, right? For it. And you never know, it could be a bidding war for this. So for me, I don't mind. It's not expensive on a revenue basis either. Potentially, this could be quite good. If you're holding this, I'd hold it. I mean, would I be, because it's above the trend, and of course, I'll let you talk about it, but would I be buying this? No, I tend to stay away from the bridges, but this is one of the more interesting ones because there's like 3 parties really potentially could be trying to outbid each other.
All right, Wolf. Listen, thank you for that, and really good. Difficult market, Wolf, and I think you've given us a great insight into maybe what we should be doing, some stocks to have a look at, and again, some great Wolfie advice. So thank you very much for that, Mr. Wolf. Okay. And have a wonderful rest of the day, Wolfie.
You too, guys. Thank you. See you tomorrow.
Bye-bye. Bye-bye.